I'm a forex coach and instructor. So today we're going to look at what is happening in the currency markets, and specifically I want to look at gold. Okay, maybe tomorrow or next, thereabout, I can analyze the other markets. Okay, but for today we're going to look at gold. So let's go to the calendar. Okay, so I just want to look at the perspective for the week. All right, so you can see that today being Monday, okay, there is no news item Tuesday except on Wednesday, where we have the price consumption expenditure. Okay, sorry, personal consumption expenditure for USD, and the prelim GDP. Okay, so these are the key words. These are the key high impact news that will be coming out on Wednesday. So for Monday and tomorrow, we can actually trade gold and make some pips from that market. Okay, so now let's go to the chart. Now when you come to the chart here, you see what the market is doing. Okay, my anchor chart is a 1 hour time frame. So when you look at this 1 hour time frame, you see that gold is pushing up. Okay, and it has been breaking breaking new highs. Okay, breaking new highs. But where it is now, the market is consolidating. The market has consolidated for hours. 1, 2, 3, 4, about the market has consolidated for about 10 hours, 9, 10 hours. Okay. So what that tells me is that there is low volume in the market for gold now. Okay. The people are buying, neither buying big nor selling big. Okay. Now, so what that means is that we should be cautious about entering now. All right. Because if we enter now, the market will just be moving with very low volume, okay, and the spread will be very, very high. All right. Now, so that's the indication here. Okay, now let's look at this other chart. I use this technical indicator for confirmation's sake. I don't depend on them for my trading decision. Okay, I just use them to add confirmation to my trade or to add multiple layers of confirmation to the trade. Okay, excuse, excuse me. Excuse me. So when you look at this market, you see that that's what gold is doing. Okay, all the big higher time frames are buying. Okay, so that is an indication. All right. So let's do the technicals. Let's look at the technicals. For now, you can see that you have this chart pattern here. Okay, you have this chart pattern here. All right. So and what this chart pattern means is that the market is uptrending. All right. Now let's add another pattern, another trend line to this chart. Now, when you add this other trend line to this chart, what do you get? You get a wedge pattern. Okay, you get a wedge pattern. Okay. Now, what does this wedge tell you? This is a rising wedge in an uptrend. For those of us who understand price action, this is an indication that this uptrend is about to come to an end. Okay, that this rally is about to come to an end. So we should watch out. While we may temporarily buy now, we should watch out for a breakdown from this support trend line. Okay, or we can also repurpose this chart. We can repurpose this chart like this and say for us to take a buy, we want to see a clear break of structure to the upside. Okay, so what that means is that for us to take a buy here, we want to wait for price to break above this key level, break and close above this key level. Okay, now when that happens, then we can begin to look for opportunity to buy. Remember, this is a rising ascending triangle. An ascending triangle is a bullish continuation pattern. Okay, it is a bullish continuation pattern. So let's look at this other chart and see what the market is doing here. Okay, now you can see the indication, the signal here is a buy, and this market, this signal has been here since last week. Okay, this chart, this indicator repaints, but it's a lot more stable than other indicators that we have out there. Okay, I worked with a friend from Pakistan to design this indicator. Okay, all right. So now, if you look at what we have here, okay, if you look at what we have here, you see that the signal is clearly for us to enter a buy trade. All right. Now, how do we enter? Entry is very, very important. You have to look at levels. You have to wait for market to break above certain key levels. Okay, so from here, from this other chart here, you see that what I think we should do is for us to, if we want to take a buy, let's wait for price to break above this key level. Okay, if it does, then we look an opportunity, we look out for an opportunity to enter a buy trade. Okay, so alternatively, what you can also do, you can set a pending order. Okay, set a pending order. I will set an alert. Okay, I want to set an alert to say if the price closes above this level, I want to get a pop-up. I want to get an alert on this system. But you must keep this alert, you must keep this window open for this alert to work. If you close it, the alert will not work. Okay, so let's come here to the terminal. Okay, and set up an alert. Okay, want to set up an alert. Okay, come here, click this alert, okay, tab, right? And you just click what? Create alert. Right click and click and select create alert. Okay, now for the action, I want the sound. Okay, for the symbol is gold. Okay, for the symbol is gold. Okay, gold. All right, so now what value? The value is the price level. Okay, the value here, it's 6503. Okay, 6503. Okay, point what? Point 20. Okay, so I want this market, this alert to pop up, to trigger when price is above, this big price is greater than, okay, this price level. Okay, I will get a pop-up. Okay, I want an alert and I want it to stay for what? For 5 minutes. Okay, for 5 minutes. Okay, maximum iteration 5 is okay. Okay, so just say okay. All right, so it's going to place what? It's going to place an alert at that price level for me. Okay, when my system is up, it will just alert me, of to just tell me that the price has what? Has gotten to that level. Okay, I hope that alert is still there. Let me check. All right, okay, it's still there. We can delete these other ones. These other ones are old. Can delete them. Okay, and leave this other one. Okay, all right, so that is it. So at least that will notify you if price has gotten to that level. All right, to notify you. Let's go back and edit this, modify uh this alert. Okay, expiration blade. All right. Okay, okay. I think that's what we have. Okay, let's test it and see. Okay, good. So that's how it's going to sound. All right. So we can come and close it. Okay, now, so while I'm on my system, okay, I wait for that to happen. Okay, mind you guys, you can actually buy from this level. I'm not saying you cannot buy, but what I'm saying is I said liquidity is low. All right, liquidity is low. If you want to buy here, you see the market will just be going up and down, going up and down. It may still go up, fine, but I want to see a clear breakout. Okay, I don't gamble when I'm trading. I want to see a clear breakout. Okay. All right. So now that is that about the technical. Let's go to the fundamental. Guys, use your AI. Okay. Use your AI. I came to an AI and I gave a prompt. Okay. And this is the baseline. It said, bottom line, bullish bias intact, but Wednesday's personal consumption expenditure and Friday's speech by the Fed chair, these are two swing points, okay, that can affect volatility in the market, okay. So, but the summary here is that the market is bullish, but that this bullish is what? That this bullish should be taken with caution, okay. This bullish should be taken with caution. Gold surged over 5% last week, breaking above this point level to a 3-month high. The RSI is in overbought territory, increasing the risk of a short-term pullback or consolidation. All right. So if you look at this chart pattern, like I told us here, you see that this chart pattern is a rising wedge in a what? In a bull market. And what that means is that this market would at a point break down and reverse temporarily. Okay. So when that happens, what you need to do is that take your Fibonacci to gauge your levels. Okay. All right. So with this, Fibonacci will tell you where that retracement, if it happens, where it's likely going to end. Okay. You can now buy the retracement. Okay. Or you short the breakout. These are the two things you can do here. All right. You can add this other level here. You can add the other level up there. You can add the other level up there to say, um, okay, let's just leave this levels. I think these levels are quite appropriate. For me, the Fibonacci 61.8 and 50, this level, they are key levels. Okay. So that's what I'll be looking out for in this market. So guys, these are the short notes I want us to take for gold. Okay, there's a potential buy opportunity here because the price is still at the support level of this trend line. Okay, there's potential to still buy up, but in the event that it breaks down, this is what we want to do to target, these key levels for our profit taking. But the candle must close below this trend line. Okay, it must close below this trend line. If you have to take a buy, let's wait for price to break above this trend line. I'll look for a buy opportunity. So guys, these are the things that's going to happen. I believe by 1:30 New York Open, we should begin to see some massive volatility in the market, and that's when we should be prepared to hop into the market, guys. Okay, so I hope this is clear and I hope you enjoyed it. Thank you very much. Do have a blessed trading week. Bye bye.